Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, November 22nd, 6:16 p.m. Eastern Time, coming to you from Mantua, New Jersey with tonight's Revere Market Insight video. Lots to talk about tonight. Change in character in the market as far as leadership and growth stocks go. We're going to dive all into it. We did a lot of selling today. Put a hedge on, and basically we saw some action today that was similar to the harsh negative reversals that we saw in mid-February with growth stocks. Dollar continues to be strong. Interest rates were high. I don't know if those were the culprit of this. Um, Jerome Powell was renominated for maintaining his Fed leadership role. It's possible that that factored something into it. There was some talk that somebody that was going to be even more dovish than he has been was going to be factored into the equation, but that didn't come to pass. And after his nomination, late morning, we started to sell off really abruptly and very harshly across the growth stock market. Major rotation going on into more defensive areas. So check over here the trend gauge. We downgraded leaders from bullish to neutral. The arrow on short term is also pointing from bullish toward neutral, as we've got the small caps and the Dow below the 21-day exponential moving average. But the way things are playing out, I wouldn't be surprised if the Dow starts to outperform here if growth is going to take a hit, and this is similar to the environment that we saw back in February. So that's something we're keeping an eye on. Medium-term 50-day moving average and long-term 200-day moving average were still firmly green, so no issue there. But what happened today, we had a gap up. We're really running strong for the first half hour, up nearly 1%. And then we just started bleeding. There was a lot of divergence early. I was discussing this with Hunter and Alex. The G5 was weak right out of the gate. So immediately when we saw that, some things that we had our eye on to add just didn't get added. We're not going to go against the trend in growth stocks, and we were seeing some weakness already very early in that avenue. Meanwhile, you saw there was a lot of strength in things like steel, oils, weakness in gold, a lot of strength in banks, and none of those areas are growth areas. So right away, when you see money flowing into defensive areas, that money's got to come from somewhere, and typically it comes from growth stocks, and that's what we saw as the day progressed. So a gap up, harsh negative reversal. NASDAQ 100 was the leader early. That would have been even worse if it wasn't for Tesla staying up 1.7% on the day, although it was up nearly over 4%. NVIDIA went from being up 3% to being down 3%. Microsoft was weak. Netflix, Amazon, Google down between 1.7 and 3%. So money coming out of some of the QQQ stocks, and as I said, very clearly coming out of the G5 growth names. That took a hit, down 2.81% on the day. That's the pond that we fish in, and when we see that, our stops, plenty of our stops got hit, and we reduced some exposure. 9 sales altogether. I'll talk about them uh, in a bit. S&P 500, we have a large position in SSO, and days like today are why we keep that, because when rotation takes place, it takes place within the S&P 500, and as money is coming out of sectors like XLK and XLC, the tech sectors, down over 1.2% each, it's flowing into XLF up 1.4%. It's flowing into XLU up 0.6%, XLP staples up 0.8%. So it certainly smooths the ride having this big SSO position that we have, and that's why, although we were lower than the S&P on the day, we far outperformed the G5 index. NASDAQ 100 down 1.16%, Dow flat after leading all day and being firmly green. just barely holding on toward the end of the day. Mid caps up 0.16%, Russell down 0.5%, but this Russell, the growth component down 1.37%, the value half up 0.5%. So again, you can see that growth lagged badly. The S&P 500, the growth component down a full percent, value up 0.58%, mid caps growth down 0.6%, value up 0.77%. So now the question is, was this just a 1-day correction from some extremely overbought conditions in some of these leading stocks? I'm not sure that it is. We saw, and I did mention last week, some weakness in some leaders, although some other leaders just stepped right in to fill that void. But a lot of those ones that were filling the void got hit today. So we're going to look at a lot of charts tonight, see where the damage is, see where the survivors are, and see where money is flowing into. So let's dive deeper into the charts, but first let's take a look at the team here at Revere. Not going to spend a lot of time on this. You know what we do. We follow uptrending markets higher. We get out of the way when markets turn weak or start trending lower. Shot across the bow at the very least today in growth stocks, and that's why we trimmed or got stopped out of 9 different positions and added a hedge. So basically our risk is right in line with what the S&P 500 is now, and if the weakness continues, we'll rotate out of growth and into the areas that are working today. Unfortunately, Market Smith has been down for the last 6 hours, so I'm going to have to use stock charts tonight and dive right into it. So here's the S&P 500. You can see this ugly candle. We made higher highs, all-time highs today, cruising along just fine. Brutal sell-off into the close, closed just barely below the 8 EMA, which is now flattish to rolling over. Not a good day. But again, S&P 500, this is really not a big deal with it only being down 0.32%. And if you saw that the Dow was up 17 points, you might think that absolutely nothing was going on under the hood. But we look under the hood every day. We're the service department of your portfolio. We're not the salespeople. So we're here to tell you what really is going on beneath the surface. So let's check the second of the indexes, the NASDAQ 100. Same situation, made all-time highs, very harsh reversal, still above the 8 EMA with this ugly red candle. Dow Jones Industrial Average outperformed today, but still reversed off of the highs and is now below the rolled over 21-day exponential moving average. But again, I did mention I would not be surprised if the Dow starts to outperform versus the NASDAQ 100 if we're heading into a period like we saw in mid-February and throughout March. Mid-caps MDY. This continues to hold up pretty well. Again, not the best candle, below the 8 EMA, which is now rolled over, but above the 21. And the small caps, IWM below the 21. 8 has very clearly rolled over, but this is chiefly because of IWO. Let's take a look at that. That's really not looking good at all. Look how far that has fallen. Broke below the 21, which is now rolled over and is approaching the 50-day moving average. This is the growth component. Compare this with IWN, as in Nancy, the value component. A negative reversal, but banks and oils held this up for the most part today, finished positive 0.55%, but also below the 21-day exponential moving average. So from a index standpoint, that's where we stand. Now let's go through some market facts here. Growth leaders, we downgraded to neutral. I mentioned that. Our bull case, we still want to stay very clearly, as always, above the 21 and the 50-day moving average, and our failed breakout would be below the prior all-time high on the S&P 500 at the 45.46 level. We closed today at 46.83. Let's go back to the S&P 500 here. Here's the breakout area over here. The 50-day moving average still slightly below that, as I've been pointing out last week. So you can see here, 50-day moving average rising at 45.16, prior all-time high 45.46. Uh, sectors that were strong today were defensive, primarily staples and utilities, banks, oil, steel, and retail. Hardest hit gold, gold, silver, and gold stocks, which had been trying to make a run, rolled over today. Cyber stocks and cloud stocks were weak out of the gate today with some very harsh selling across the board. That was another thing that we noticed that kept us out of adding any new longs this morning while the market was rallying. Uh, S&P 500 again failed at 4,700 for about the fourth or fifth time, so we can't get over that. The ADMA, a little bit of a red flag there as we're rolling over. Now we're still above the 21-day, which is down at 46.42, but that's less than 1% away now, so it's something we want to keep an eye on very closely. Let's get into some individual charts, and we can see some things that really got hit today, and some things that we got stopped out of. So let's start off with when the market turns, and first thing we want to do when we see selling is take a look at the most recent positions that we added to the portfolio, and if they're negative, get out on them before, if possible, your stop even gets hit. So we did some of that. Sold out of coin today. That broke the 21. Just added this is a big metaverse stock, but if growth is going to get hit, this is going to get hit too. You can also see on its RSI broke from over bought back and is headed lower. Still above the 21-day exponential moving average, but that's a very ugly candle to follow up a not so nice candle from Friday. So Unity. We also trimmed some of our roadblocks. We still have nice gains in this, but that's not what you want to see. Now, again, this went a long way in a very brief period of time, and it did bounce off the ADMA. That's why we're still holding some of it. Also took off some Ambarella, which we still have booked some nice gains in. That broke below the 21. Also took a little bit off of Net, some that we added recently that we were underwater of. And this broke and closed below the 21, still holding a piece of that. Also took some profits in the video, which was very extended, locked in about a 67% gain on some of it that we added back from the beginning of the run on this big outside negative reversal candle. We got stopped out of uranium, URNM. You can see it broke the 21 last week, broke the 50 today. And none of these that we got stopped out on that were recent adds exceeded our 0.2% of the overall portfolio. So the way we want to keep our losses small is by focusing on that 0.2%. That means you can get stopped out on 5 new buys in a row and you'll still only lose 1% overall of your total portfolio. And we're very clearly sticking to that. We also wrapped up our profits in AMD as it had an outside negative reversal. Still looks fine. Want to see how the dust settles on this pullback with stocks. And we also got stopped out on Nugget, which is the 2 times gold ETF, as that was unable to get back above this breakout that it tried above the 200-day moving average. Weakness late last week, and that weakness followed through today, and our stop got triggered. And then the NASDAQ 100 at its height today was 8% extended from its 50-day moving average. That's extremely excessive. In fact, on our pre-market call, we were discussing whether or not we were going to put the stop sign on the NASDAQ 100 because of how far extended it was going to be. By the end of the day, it was very clear that it got too extended and had this harsh reversal, and this is still somewhat extended, and that's one of the reasons why we put the QQQ on. I would say the odds of the Qs are to go lower before they go higher, considering this extended state from the moving averages and also the action in the leading growth stocks today, which were very tech heavy. Let's take a look at some of those that got hit extremely hard today. When I'm seeing down 10, down 15, down 20, and a lot of these growth stocks just getting taken apart, that's wholesale liquidation, get me out at any price, and it's not healthy, and it's something we definitely need to pay attention to because it happened very clearly back in February, and we don't want to get hit by that again. So here's Asana. This was a very strong recent leading stock, completely broken now. Silvergate, a crypto stock, ugliest candle that you could probably look how this went to all-time highs, reversed, and actually broke below the 21. This had a over 20% range today, and that's not normal action. Something else that got hit hard today, I mentioned net. This was one of the big leaders. That's the ugliest candle that you'll see on this chart. Crypto got hit today, ETHE. They started out green, they ended red. So the inability of Ethereum to get over the 8 and the 21-day exponential moving average is definitely something that we need to pay attention to. And Bitcoin couldn't get back above 60K. And you can see how its moving averages have rolled over also. Another thing that got just blasted today, and we noticed this early, DocN. Look at the 2 weeks of profits wiped out in one day in this. This isn't normal action, and it's something that we definitely need to pay attention to as growth investors. How about MDB, a recent winner? Based on earnings, you see candles like this all over the place, bounced off the 50-day moving average, but this is certainly not what you want to see in a stock that was just recently at all-time highs. Now, the very key levels today are going to be today's lows. If they're reclaimed, we go sideways for a little while, the market can settle down. We're going to be in good shape. Again, my expectation right now is rotation. We're going to see rotation into Dow type stocks, very similar to what we did back in February and March. That continues to happen. That's the area that we'll be focused on. We currently own Nucor. That was up 7% today. That's a steel stock, as steel stocks were very strong. Dexcom held its 21-day on the pullback today. Apple was green most of the day, finished at the bottom of the range, but still held on and stayed green. I showed the negative reversals on AMD and NVIDIA. Here's NVIDIA. Again, still extended in these things, went for a while. Maybe they just need to go sideways for a while and settle down, or maybe we'll see a 20% drop in growth stocks in a 2.5 week span that we saw back in February. We're open to everything. We're prepared for everything, and we will take appropriate action as the charts unfold as the week goes by. What other facts do we want to take a look at here? I think I covered just about everything. The bulls would want to see us get back above 4,700. That's been a very clear resistance area on the S&P 500. We really want to do a lot of work comparing how the various indexes are working to see if the Dow, if this is starting an outperformance period versus the NASDAQ 100. And if it doesn't, maybe we just put a little bit of tight action into some of these NASDAQ 100 leaders, and then we head higher into the close of the year. But again, we're open to all possibilities here. That's going to wrap it. As always, I'd like to hear any feedback from you. I'm on Twitter at @DVandenbord, email don@revereasset.com, or phone 855-REAL-WEALTH. Wrapping up a very red day in Growthville. And Monday, November 22nd, this is Don Vandenbord telling it like it is. Thanks for listening and have a great day.